How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing a market update, taking a look at the S&P, the Dow, and the Nasdaq, and we're also going to be doing a trading update, talking about what I personally did in the markets today, plus a bunch of stocks and ETFs that I'm watching and that I'm looking to trade heading into this month of April in 2020. And like you all read in the title of today's video, I want to go over whether or not I think the market has further downside based on the technicals from today's session. So if you guys enjoy this type of content, as always, hit that like button for me and consider subscribing to the channel if you haven't done so already. And also feel free to join our Discord group chat and our Facebook group linked down below in the description box. Those are 100% free of charge. You don't have to pay a single penny to get in there. So let's get right into the video, starting off with the S&P 500. And very interesting how today played out, guys. We kind of, not saying that I predicted this, but we talked about this in yesterday's video, right? We talked about these major levels of resistance, one of them being this 180 SMA on this hourly chart, and the other one being the 2630-ish, right? That general area that we peaked at back on the 26th of March. And look at today's action, down $42, down 1.6%, with heavy resistance at those levels. And at this point, with today's close, guys, being right around 2580, we closed right above this old resistance, the top end of the previous range that we filled, which is 2580, right? We're holding that, as well as this 50 simple moving average on this hourly chart. So it's funny. It's putting the S&P in a pinch. So tomorrow, kind of like today was a bit, is going to be a huge deciding factor on whether or not there's going to be downside for the rest of this week or further upside. And by that, I mean, if we break 2580, very critical level of support, I'm thinking the S&P can gap down to 2550. That's a major level I'm looking at. And heck, if things were to get ugly, probably not in one day, but if we were to finish the rest of the week red, maybe we gap down towards this 2450 level, which would put us down about 5% below from where we are now. So that's kind of what I'm looking for on the downside here. That's if we get those technical breaks that I just mentioned. And on the upside, let's say we break 2630. That's a pretty big level of resistance. Again, like I mentioned, I'm thinking the S&P is going to continue to rally here in the short term, right? With the next resistance being at around 2730. So if that were to happen from 2630 up to 2730, which is the next gap to fill, that would be roughly a 3% move here in the S&P. But like I've mentioned in many videos, guys, you know, I believe that there's still downside in this market. I believe this is simply a rally in a bear market. And if we take a look at previous bear markets, let's just go back on the S&P here to the Great Recession. You guys can see we saw a similar type of rally back then. And I'm not saying that this market's going to collapse 60%, almost 60% like it did back then, but I'm saying that you have to view this with an open mind and actually look at previous crashes and really understand what has happened, right? There's many rallies in these crashes, and I want to just open your eyes to that, because a lot of people think we're just going to bounce back. The bear market was just like that. It's over with. And, I would love for it to be over with, but the truth is that's not how it works, right? It's likely to go down, but then again, it could probably keep going up. Who knows? Only time will tell, and all we can do is look at history and kind of what happened. And back in 2008, take a look here. This was back in October 2007. The S&P 500 was at 1576, right? We sold off all the way down to about 1260, and this was roughly in the matter of a couple of months. Mind you guys, this is the monthly chart here, so all of these candles represent a month, right? So we actually sold off from, again, 1540 down to that 1290 level in the matter of a couple of months. And take a look. What happened there? What happened there? In March 1st, 2008, we rallied from 1250 up to, let's say, 1430. A lot of people back then, not saying everybody, obviously there were a lot of problems, but a lot of people might have saw this as, hey, maybe the markets are recovering. But you guys see what happened. We dumped even further. We dumped down another, what? From that peak that we saw in that mini recovery, we dumped down another 16% before we consolidated a bit for another 2 months. And then ultimately, that is where the massive crash came after we saw 2 mini rallies in the S&P. And the ultimate crash was when we went from 1290 all the way down to 660 in the matter of 6 months. So that kind of gives you a better picture of what happened last time, right, in 2008. And even if we go back to 2000, right, which is what my chart allows me to go back to at this point, we can see that the S&P went from 1520 down to about 700, and through that whole bear market, right, which was around a 50% drop in terms of this time period, we saw multiple rallies in the S&P, and these rallies, they weren't 3, 4, 5% rallies. No, you guys can see they were pretty substantial. 18% rally there. We saw another 15% rally here, and guys, we just had a 17% rally, and did I say point? I meant 16% rally. 16% rally before. We just had a 17% rally now in the S&P 500. So that could open your mind a bit to maybe, you know, this is one of those mini rallies, right? One of those mini rallies within the bear market, and really the worst is yet to come. Not saying that's the case, right? But I'm just trying to open your guys' mind to the possibilities, right? And really, it really could be there really could be another big drop in store here, right? If we take a look at the Dow Jones, down 410 points today, down 1.8% with a very strong resistance at those levels we talked about yesterday, just like the S&P 500, right under this 180 SMA. If we take a look at the NASDAQ, it didn't do as bad. Down not even 1%, down 0.96% to be exact, down about 75 points. And despite the NASDAQ actually breaking out of the major moving averages on this hourly chart, it's still seeing a bit of resistance at around 7,950 to about 8,000 bucks. And that's a pretty big resistance at this point. And with this red day today, it seems like we may be heading down to the bottom of this range, being around 7650, and that is on the downside, at least in the short term here, the level that I'm watching for the NASDAQ. So overall, guys, that is kind of what the market is doing right now, and some points that maybe can open your mind and give you some more insight on what happened in the previous 2 crashes that we've experienced here over the past 20 years in the world and in the United States, right? So let me know down below in the comments, what are your thoughts on that? And before we do get into the trading update of this video, let's do a quick CV update, because that, at the end of the day, is what is causing this drop, and it's not slowing down, guys. Worldwide cases today, 846,000, and in the USA, there are 181,000 cases. And yesterday, when I filmed my update video for this channel, the numbers were 775 cases worldwide and 160K cases in the United States. So over the previous 24 hours, roughly a 20K case increase here in the US, and worldwide, it's about roughly 75,000 cases increased over the previous 24 hours. And, I try not to obsess over the news. To be honest, I don't watch the news, if I'm being quite honest with you guys. Because they're just, spewing fear at the end of the day. It's nonstop. And after you watch it a little bit, I'll be honest, I did watch the news, pretty regularly when this first started to break out. After you keep hearing it nonstop, you're just like, I'm done with it, right? I know what to do to kind of, quarantine myself and social distance and so forth. So I'm just going to not watch it anymore, news, right? And that's kind of the state I'm in. But overall, I'm still keeping an eye on the numbers and kind of waiting to see when this curve flattens out, because at that point, that is going to be an interesting time in the markets where we may pop back up temporarily again. We'll see what ends up happening, but that's kind of what I'm keeping my eyes on. So let's get into the trading update for today, which another funny thing is, guys, this played out beautifully, my trade today. And if you guys watched my video yesterday, I talked about this, right? And my trade today was in DIGAS. And yesterday, I didn't trade, right? I didn't trade. And the reason is it's because I was eyeing up DIGAS and I didn't get the kind of the confirmation point that I wanted to see before getting to get in, and I figured waiting till today would have been a better time to get in. And oh boy, was I right, because today DIGAS actually went down into the low 300s. It actually peaked into the 290s momentarily, so I got a much better share price on this dip today. And the confirmation that we held $300 pre-market heading into the market open gave me even more kind of confidence to get into this trade. And honestly, it played out beautifully, which goes to show patience is a virtue. And if you guys don't know, DIGAS is an ETN that goes up. It goes up in value whenever natural gas is selling off. And the contracts for natural gas that we're tracking now are the May ones, the May contracts, which are the May futures / NGK20. This is what I'm personally watching, right? And again, this DIGAS ETN goes up whenever these futures are going down, and they change month-to-month basis. And if you guys follow my videos, you know that, because we do track natural gas a lot here on the channel. So on this daily chart, 1 day, 1 minute, we can see, actually, let's pull up this 5-day, 5-minute. We can see the gap down. I believe this was on Sunday. We rallied up to 173. This was actually this morning, right? And once we started to take a pretty aggressive drop here on the 5-day, 5-minute, if we scale back to the hourly, we can see, let me just quickly clear this drawing set. We can see the overall downtrend is pretty much intact. So that told me that we're probably going to push to maybe not a lower low today, but we were going to see some downside, right? And again, I was right on that end of the analysis. And going closer here to exactly where I got into DIGAS roughly at 10:30 a.m. Eastern Standard Time. As we saw the big drop here in natural gas at about 160, we saw a bit 167. We saw a bit of a recovery up to about 170. And at this point, as we started to aggressively dump down, the moving averages were acting as resistances. I took a position in DIGAS, and you guys can see not too much volume in DIGAS today, but I didn't have any problems with liquidity and orders filling. I set a limit order at $315 on this with an exit limit at $325. So overall, that is where I caught it at 10:30 a.m. ish. Maybe a little bit before that, and wrote it up to $325. So overall, guys, this move was not the craziest move, but nonetheless, it was roughly a 3% move in DIGAS. And that's what I personally did today. And again, it goes to show that sometimes not trading in a day is fine, and waiting for the opportunity to present itself, not forcing anything, is the way to go. And it ended up benefiting me today, guys, since I did wait for this play right here. So let me know down below in the comments, what did you guys do in the markets today? Now, let's just go over a bunch of stocks that I'm watching, and I want to just talk and give you guys some opinions on these stocks. So a couple ones that are, of course, on the top of my list here for potential short-term volatility due to the whole CV outbreak are Johnson & Johnson, ticker symbol J&J. They're looking to make a vaccine here by early 2021, so that is great. They had about an 8% day yesterday. Today, down about 1.5%. But either way, this is one on my watch list. It took a bit of a drop today. You can see clear resistance here under the 180 SMA, which is a bit worrisome. We may see a further downside here, especially if earnings disappoint in the next couple of days. And actually 2 weeks from now, they report in the middle of April. And if the markets in general continue down, which these futures at this point, they're down a bit, it seems like, after hours. J&J might see some further downside, honestly, but either way, I'm looking at it, and especially if we get to the low hundreds, I'm actually not looking to trade it down there. I'm actually looking to add more in my long-term position for J&J down in the lower hundreds. I would actually love for it to fall down there. And another stock is Abbott Laboratories, ABT. This is one that actually made a test for the CV. It takes 5 minutes for this test to work. And today they were down about 0.5%, nothing crazy. But yesterday they were up like 20% at one point, which is incredible. And like I mentioned a lot on this channel, and if I could get my words out, and in these videos, right, guys? You don't make investments simply based off of short-term speculation. You don't make long-term investments, that is. You can do trading short-term, of course. I do it. I talk about it on this channel all the time. But basing long-term investments on, let's say, a 5-minute test for the CV or with J&J, the vaccine, that's kind of dumb in my opinion. But for short-term volatility plays, this is going to be great to watch. And Apple, guys, the funny thing is Apple is holding up despite this negative news around their 5G iPhone, production being delayed, launch being delayed. This is not good stuff, guys. And for me, Apple is still extremely overvalued. I'm not saying it's like in a Bitcoin bubble, right? Back when it was at 330, I think it was in a bit of a bubble. Not saying it was extremely overvalued, but I mean, it kind of was, but not like it's extremely overvalued to the point like it's Bitcoin bubble status, but still, and a lot of people can agree, back in the 300s, Apple, it just wasn't an attractive price, considering it went up from $150 just under a year ago, or just about a year and a half ago, all the way up to $300. It's just incredible. It's crazy, honestly. It's not warranted in my personal opinion. And now that we're dropping to $250 still, I think a price target under $200 would be a point where Apple could be a good price for an investment, right? That's where I'd consider adding shares in Apple. And that goes to show, guys, and if you understand how the S&P is formulated, it's held up by a lot of these massive companies like Apple, Microsoft, and a bunch more, Google, Amazon, right? And a lot of these haven't fallen too much quite yet. And that's the scary thing, right? Because if we see Apple truly fall more like into the lower 200s, even in the 100s, that is when we're going to see this market in general just fall through the floor, right? Because again, Apple, Amazon, Google, Microsoft, they make a big amount of this overall market. So that is when I'd actually step in and really go heavy buying long-term positions if that were to happen. Not that I'm not buying long-term positions now, because I'm still averaging in. But if Apple were to bring the markets down, Microsoft, that is where I'd start buying. Let's say if the markets were buying aggressively, let's say if the markets were down, let's say 50% in all in terms of the S&P, instead of what it's down now being just 23%. So that's kind of what I'm watching for in the big stocks like Apple, Microsoft, just looking to see if they do start turning south again. And when it comes to some other plays, CCL was very funky today, guys. If you saw them this morning, they went from $10.27 pre-market up to $14 per share. That is a move of like 30-ish, 40% in the stock. It actually got halted a bit, and the catalyst behind this one could be their stock offering. Let me see if we can see it here. 1.2 billion plans, 1.2 billion common stock offering to bid for cash, and that's kind of a decent. At the end of the day, it's not that great because it kind of devalues the shares of the existing owners if they're pumping more shares there in the market. But to raise cash in the short term in this liquidity crisis for CCL, I guess it's not that bad of an idea. I'm not some kind of CEO of a massive public company, but just judging at it from the sidelines, that's not bad, I would say. If I was an existing shareholder, it would be a different story maybe, but it seems like the stock in general is liking it. It was up today 3%, which is not too crazy, but the move in general from 10 to 14, that was a pretty crazy move nonetheless, right? And when it comes to some other stocks, guys, that's really it at the end of the day. I'm watching these big names here on my active watch list. The truth is, in times like these, guys, you know it too. I'm not really trading too much individual stocks. I'm really trading the ETNs, these leveraged ETFs like DIGAS, UGAS, right? I'm trading SPXS, which goes up whenever the market in terms of the S&P is going down. So let's say the S&P drops further here, which could happen based off these technicals and what we talked about earlier. The SPXS ETF, it could be a huge play over these next couple of days. This offers, no joke, a ton of value in terms of how much money you can make. It can go back, who knows, mid-20s, even 30s if this market were to drop through the floor, right? So there's a lot of potential there. Another one that I like is SQQQ, which goes up whenever the Nasdaq is going down. So Nasdaq drops 3%. SQQQ, since it's a 3x leveraged ETF, it's going to be up 9%. And an interesting thing today that happened, gold actually saw a pretty crappy day, down $52 in terms of these futures here, down 3.18%. So not a pretty day for gold, but one thing that I'm noticing here is this could slowly, it's slowly building, in my opinion, slowly building a horizontal channel. It could be, at least, right? Because generally speaking, when we were here back in the beginning of March, we actually consolidated right at 1590 and we bounced up to 1700. And the previous time we broke above 1590, we rallied up to 1700, and we did that again literally a week ago. So for tomorrow, I'm looking to see some consolidation here. If not, we may be going back down to the mid 1550s or 1500s. But let's say we get the consolidation and the pop back up in this range. GLD could be a very good option tomorrow, which is pretty much an ETF that tracks the price of gold. And you guys can see today, GLD did not have a great day, but it could be a bounce back play. So I'm for sure watching it heading into tomorrow. Another thing I'm watching is crude oil. These crude oil futures, which now up about 0.1%, nothing crazy, but still, I'm looking to see if they kind of creep under the $20 level, if they go above $20, because this is a level that, if I'm not mistaken, we haven't been at in the past 18 years. So those are just a couple that I'm watching at this point, guys, and some analysis on different stocks and some thoughts that I have right now in the market. So let me know down below in the comments, what are your thoughts on everything? I hope you all did find some value in today's video. If you did, feel free to go down below for me and maybe just hit that like button and maybe consider subscribing to the channel. And if you guys actually want 2 free stocks from Webull, you can actually get that with my affiliate link down below in the description box. All you have to do is deposit $100 into the account and you get 2 free stocks, with one of them being valued up to $1,400. So go get your free money. Link down below in the description box. Thank you all for watching so much. Thanks for the support as always. I'll catch you all in the next video. Good luck out there. Stay safe, guys, and peace out.